Okay, so now let's come to the cash flow statement. Now, friends, remember P&L, of course, is extremely important. Balance sheet is important. Cash flow statement is even more important than the P&L. And the best part is cash flow is not as complicated as P&L. So cash flow is relatively simple to understand. Uh, how do we understand the cash flow? So number one, we need to understand as to what are the types of cash flows that we have in the business. What are the types of the cash flows that we have in the business? And please remember, there are only three types of the cash flows in the business. For any business, doesn't really matter. Big company, small company, medium company, private company, public company, listed company, unlisted company, government company, doesn't really matter. There are only three types of the cash flows that we have in the business. Number one is cash flow from the operating activities. क्या मतलब है इसका? इसका मतलब यह है कि the cash flow that you are generating from your operations. That means the profit, the cash flow the profit that you are generating. So your depreciation and your earning after tax. So that is one component of your operating cash flow from the operating activities. So earning after tax plus depreciation plus amortization. These three figures put together is one component of cash flow from the operating activities. Second cash flow from the operating activities is change in working capital. Meaning what? Meaning, and I'm sure you can very easily understand, if the inventory in your business on 31st March 24 was 100 crore, and this inventory in your business on 31st March 25, so 31st March 24 it was 100 crore, and on 31st March 25 it has come down to 50 crore. Now what does it mean? It means you have got 50 crore of cash in your hand. From where? From the reduction in your inventory. So that is the second component of your operating activities. That is the first component of your cash flow. The second component is investing activities. Now, what is the meaning of investing activities? As a business, you purchase assets, and sometimes you sell off the assets because you dispose them off, because either the technology has undergone a change or the machine is not as efficient as it should be. So you replace that machine with a new machine. So when you are investing your money in buying new assets or selling the old assets, that is your cash flow from the investing activities. Obviously, when you are purchasing new assets, your money is going out. So it's a negative cash flow on investing activities. When you are selling your assets, the cash is coming in. So this is a cash flow, a positive cash flow from the investing activities. Number three is cash flow from the financing activities. Now, what does it mean? Remember, we all are in the business, so we understand in business, we have to grow. And for growing the business, what we need to do, we need to invest in new assets. So if we have to invest for growth in new assets, we need money. So where that money is going to come from? That money is going to come from, number one, from the operating activities. And remember, as a business, I'm going to spend 8,000 crore on a project. So 8,000 crore is the capital expenditure that I am planning. The cash flow which is available to me from my operating activities is only 2,000 crore. So what? There is a gap of 6,000 crore. So where do I bridge this gap in my cash flow for the purpose of completing my expansion program? So that is where the money is going to come from, the financing activities. That means either I am going to raise this balance gap of 60 crores by way of equity, or I am going to raise it by way of debt. So that is what is the basic understanding for the purpose of cash flow. So cash flow from the operating activities, cash flow from the investing activities, and cash flow from the financing activities. The last point, how should be our cash flow from the operating activities? So how do we make sense out of the cash flow? So you have made a cash flow of your business. How do you make sense whether the cash flow of your business is good or not good? And the rules are very simple. The rule number one is cash flow from the operating activities of your business must be as high as possible and should have a increasing trend. So that means year after year, this figure of earning after tax plus depreciation plus amortization, that is the cash flow from the operating activities, this figure should be increasing year after year. It should be as high as possible. It should be increasing year after year. How should be your cash flow from the investing activities? Given a choice, I would love to ask you this question, but let me come back to the point straight away. So how should be the cash flow from the investing activities? Should it be negative or should it be positive? Again, as a business person, as business owner, promoter, director, we need to look at this number very critically. So if the economy is doing well, everything is going good with the economy, so there's a demand for your product. In that case, the cash flow from the investing activities must be negative. What does it mean? It means I must invest more in putting more assets, new assets. So the cash flow in case of a growing economy, when the demand is good, the cash flow from the investing activities should be negative. But if the economy is in slump, there is a recession, economy is not doing well, in that case, the cash flow from the investing activities must not be negative. You should not incur in capital expenditure when economy is not doing well. Why? Because you will lock your capital on that capital. You will not get any return, which of course will be a bad sign for your business. How should be the cash flow from the financing activities? So the cash flow from the financing activities must be in combination of debt and equity. So if you are needing more capital expenditure, to the extent your cash flow is coming from the operating activities, the balanced cash flow has to come from the financing activities in the ratio of equity and debt. And that's where you need to remember, it is good to keep a debt equity ratio of 2:1. 2:1. So this is how, friends, you will manage your cash flow. This is how you will manage your cash flow activities. Now quickly, how should you utilize the cash flow? Number one, 2% will go into the CSR. First, pay the repayment of debt. So when you are doing your cash planning, so see the cash that you have got, you use it first for repaying your debt. Secondly, you use it for augmenting your working capital. Thirdly, for maintenance capex. Fourthly, organic growth. Fifth, inorganic growth. Thereafter, strategic investment. Thereafter, other investment opportunity. If money is still left in your hand, pay dividend. And if money is still left in your hand, then do the buyback of shares. So friends, with this we come to the discussion on the P&L, balance sheet and the cash flow statement. This is already 5:01 in my watch. So we have just crossed the time by 1 minute. If it's fine with all of you, I would be happy to take a couple of questions. So thank you so much. Thank you.
I can see only one question post the session, sir. If we can take this up and close the session.
Yes.